What if I told you? The money in your bank account is not really yours. Right now, as you watch this, your salary, your savings, your future plans are being used by someone else to make millions. And the most shocking part, you gave them permission without even realizing it. This is not a conspiracy theory. This is how the banking system actually works. When Adam opened his first bank account, he felt safe. The glass building, the security guards, the smiling teller. Everything screamed trust. He deposited his first paycheck and thought, finally, my money is safe. But behind those walls, something very different was happening. The bank didn't just store Adam's money. It used it. When Adam deposited $1,000, the bank didn't lock it in a vault. They kept a small part and lent the rest to someone else. To another customer. To a business. To a mortgage buyer. They charged that person interest, while paying Adam almost nothing. Adam believed his money was sleeping in the bank. In reality, it was working for them. The first crack in the illusion. One day, Adam tried to withdraw a large amount. The teller hesitated. She typed something, then said, "Sir, you'll need to come back tomorrow." Adam laughed nervously. "It's my money." She smiled politely. "Yes, but we don't have that much cash today." That moment changed everything. If the bank didn't have his money, then where was it? Answer: it was loaned out, spread across dozens of strangers, circulating in the economy. The bank had turned Adam's savings into their business fuel, the hidden deal you never read. Buried inside the tiny letters of the contract was the truth. When you deposit money, you are not storing it. You are lending it to the bank. Legally, that money becomes the bank's property. They promise to give it back, but only if the system is calm. Only if everyone stays quiet. Because if everyone comes at once, the bank collapses. Ending cliffhanger for part 2. Adam went home and searched one terrifying question. What happens if too many people take their money out? And what he found made him realize something disturbing. Banks don't survive on money. They survive on trust. And trust can break in a single day. Adam couldn't sleep that night. One question kept repeating in his head. If banks don't keep all the money, then where does new money come from? So he started digging. What he discovered felt unreal. Money from nothing. When a bank gives a loan, it doesn't hand over saved cash from a vault. It creates new money with a few keystrokes. If someone asks for a loan of $100,000, the bank doesn't take that money from another account. It simply adds a number to a screen. $100,000 appears out of thin air, and just like that, debt is born. But here's the trick. That $100,000 must be paid back with interest. Yet the interest money was never created. So where does it come from? From more loans, more debt, more interest, more pressure. The system doesn't want you debt-free. It needs you in debt. Adam meets the loan officer. Curious, Adam visited his bank. He sat across from a loan officer and asked, "Where does the loan money actually come from?" The officer smiled politely. "From the bank." Adam pressed harder. "From where exactly?" A pause. Then the officer said carefully, "We create credit." That was the moment Adam understood. The bank wasn't a storage building. It was a money factory. And every factory needs customers. Customers who borrow. Customers who owe. Customers who panic when they miss a payment. The interest trap. Adam imagined two people. One with money. One without. The one without takes a loan. Over time, he pays back more than he ever borrowed. That extra money flows upward. To the bank. To investors. To shareholders. Slowly, money moves from the many to the few. Not by force. By contracts. Why the system never stops. If people stopped borrowing tomorrow, the economy would slow down. Businesses would close. Markets would fall. Governments would panic. So borrowing is encouraged. Credit cards. Home loans. Car loans. Student loans. Buy now. Pay later. Low interest. Easy approval. Debt is sold as freedom. But it behaves like a chain. Invisible, but heavy. Ending cliffhanger for part 3. Adam then learned something even darker. When banks fail, they are rescued. But when people fail, they are replaced. He typed another question into his search bar. Why do governments save banks but not ordinary people? And the answer led him straight into politics, power, and control. Adam finally understood something painful. Banks weren't just businesses, they were too important to fail. So when they made mistakes, they weren't punished, they were rescued. The night everything almost collapsed, Adam watched an old documentary about a financial crisis. People stood in long lines outside banks. Screens showed red numbers falling. News anchors spoke in trembling voices. One sentence repeated again and again: if the banks collapse, the economy collapses. And that was the excuse. Governments printed money, used taxpayer funds, and poured it into failing banks. Not to save customers, but to save the system. WHO really paid the price. After the bailout, nothing felt normal. Prices went up, jobs disappeared, wages stayed low. Adam realized something shocking. The rescue money didn't come from nowhere. It came from higher taxes, inflation, reduced public services. People who never caused the crash paid for it. The bankers kept bonuses. The people kept bills. Power behind closed doors. Adam learned about a dangerous friendship. Banks need governments. Governments need banks. Banks fund politicians. Politicians protect banks. New laws are written quietly. Meetings happen behind doors, and the public hears about it last. When rules become too strict, banks threaten the economy. When banks break the rules, governments soften the punishment. It wasn't corruption in the movies. It was legal power. The fear weapon. The system runs on one emotion: fear. Fear of collapse. Fear of losing savings. Fear of losing jobs. So when a bank is in danger, leaders say, "We must save it, or everything falls." And people agree, not because they love banks, but because they fear chaos. Adam's final question. Adam felt smaller than ever. He had trusted the system, worked hard, saved carefully, yet the system protected itself, not him. So he asked the last question that mattered: how do I protect myself from this? And that answer was something banks don't like to advertise. Adam no longer saw banks as villains. But he also no longer saw them as friends. They were tools, powerful tools, dangerous if misunderstood. So instead of trusting blindly, he started thinking differently. Rule number 1. Never keep all your money in one place. Adam learned the first lesson fast. A bank can limit withdrawals, freeze accounts, delay access. So he split his money. Some in cash, some in different banks, some in assets that couldn't be frozen easily. Not to run from the system, but to avoid being trapped inside it. Rule number 2. Debt is not always evil, but ignorance is. Adam stopped seeing debt as normal. He asked, is this loan making me richer, or just busier? If debt created income, it could be useful. If it only created payments, it was a cage. He avoided emotional borrowing, luxury on credit, status on loans, life on installments. Freedom felt better than upgrades. Rule number 3. Learn the game, don't curse it. The rich didn't hate banks. They used them. Low interest loans, tax advantages, leverage. Adam realized something uncomfortable. Schools teach how to work, not how money works. So he studied inflation, interest, assets, cash flow. Knowledge became his shield. Rule number 4. Never trust a single promise. Banks promised safety. Governments promised stability. Markets promised growth. But Adam trusted only diversification. Because systems don't fail slowly. They fail suddenly. And those who prepare quietly survive calmly. Final message. Banks don't steal your money. They use it. And the dark truth is not that banks are evil. The dark truth is, most people never learn how the system works, so they stay inside it, confused and dependent. Adam didn't become rich, but he became aware, and awareness was the first real profit he ever made.